What's up, guys? Welcome back to my channel. I find it very interesting that the vast majority of people on X, on social media, are constantly trying to short the stock market, despite the S&P 500 making new highs every single day. And in this video, I'm going to list the reasons why the stock market will outperform people's expectations in 2026. So watch this video all the way through. Now, late Sunday night, we got a video from Powell stating that he was under criminal investigation. And that led to a future selling off about 200 points. The Dow was down 200, the Nasdaq down 200, the S&P down almost 1%. And thereafter, Besant promptly told Trump late Sunday that federal investigation into Powell made a mess and could be bad for financial markets. Now, that tells you that there's a Trump put. Trump simply wants the stock market to be higher in 2026, and I wouldn't fight the administration at all. So that tells you where the market is headed. So the S&P 500 got a gap down. We hit 696, I believe, very early in futures, and we got a gap down about 1% on the S&P 500, and we recovered the entire drop and even ended the day green on the S&P 500 for Monday to start off the week. So you can see that I made about 200 bucks and with an unrealized loss of $60, and I'm still in this January 23rd 2026 700 call position. I believe that the S&P 500 should hit 7,000 or even, push above it. And you can see that the average price here is 2.89, but I'm keeping my position light just in case the market pulls back on CPI tomorrow, on PPI on Wednesday, so I can add to my position. But I believe that 700 is acting as a magnet for the S&P 500. So that's how I'm positioning myself. And part of the reason why a lot of people keep shorting the stock market is because of market psychology. They're getting PTSD. They're getting flashbacks of the 20% crash that we had in 2025 in April. So a lot of people are positioned for that. And that's why I don't think the market will behave what people expect. So you can see that the leading up to the crash of 2025, we had a lot of bearish divergences on the weekly time frame leading up to it. So the MACD was forming lower highs, but the market was pushing up, making higher highs leading up to this consolidation in January and February of 2025, and probably had a 20% sell-off. So that's what a lot of people are positioned for. Hitting into January and February of 2026, people are expecting a massive crash, a sell-off, but I don't think it's going to behave that way. I think that the opposite is going to happen in 2026, where we push up into March or even April of this year, and then we get a sell-off for 2026 to reset a lot of these indicators. You can see that for 2026, we don't even have all these bearish divergences on the MACD building up on the weekly time frame. We only have a bearish cross, and it's starting to get a bullish cross on the weekly time frame. So I believe that because the price is holding above all these moving averages, the 20, the 9 EMA, the 50, the 100, I believe that the price should continue to push higher, and until the price action tells you that it's about to get a sell-off, I would not try to short the stock market. Sure, we could have corrections, we can have even a pullback to the 20 moving average, but until all these bearish divergences build up on the daily, on the weekly, on the 4-hour time frame, it's only right to remain long. So on the daily time frame, you can see on the S&P 500, we do have a bullish cross on the MACD signaling bullish momentum. We don't have anything like we saw in November of last year. In November of last year, we had, a sharp, MACD cross on the daily time frame, and we got a bearish momentum reading for pretty much all of November. And that's led to increased volatility. We have gap up, gaps down, and we have like 2 to 3% moves on the S&P 500. But you can see that we don't have anything like that. So until the daily MACD tells me that we're getting a bearish cross and that volatility is increasing, it's only right to remain long. Sure, like we could see some pullbacks like we saw on Sunday. That's why I'm positioned light, right, on my call position, so that if we do get a gap down, I could add to my position, and I could remain long without losing too much money. So you should always expect gap downs and pullbacks of some sorts, but until the MACD reading on the daily, the weekly, the 4-hour time frame tells you that things are shifting, the trend is shifting to bearish, it's only right to remain long, like I mentioned. 4-hour time frame, I was worried that there was going to be a bearish divergence on the 4-hour time frame with the higher high price action and the lower high reading on the MACD. But look, we promptly erased this bearish divergence, and now we're getting a bullish cross on the 4-hour time frame. So you can see that, price is holding well above all these moving averages, the 9 EMA, the 20, the 50. And I believe that if we do get a correction or a pullback, these moving averages should catch the price action in the 4-hour time frame. So if we get a deeper pullback, like to 689, to 687, even to 684, it should catch, we can get a reset of these technical indicators, and then we should get a push higher. And you can see that, a lot of these tech stocks like Apple, and they aren't participating in this rally at all. You can see that it made an all-time high, 288 in about November or December of last year, and then promptly sold off about $20. So if Apple decides to, participate in this rally, it can help drag the S&P 500 even higher. As you can see, like with tech stocks like Google, which are making new all-time highs, like they aren't showing any signs of deterioration at all. The MACD just got a fresh bullish cross. The RSI is still, in overbought conditions, but it can stay in overbought conditions for longer than you expect. The price action is holding above all these moving averages, the 9, the 20, the 50, until you start to see a breakdown in the Mag 7 stocks, the broader market. And you can bet that these tech stocks will continue to drag the S&P 500 even higher. You can see that for the broader market, the IWM, the small cap stocks, the last time we got a rejection off the all-time highs and a sell-off in the broader market, it hit resistance for the Russell, and then we promptly sold off, right? This was in April of 2025. So early 2025, we hit resistance and we sold off. But this time in 2026, look what happened. We broke above resistance. We broke above these resistances that led to a sell-off. We held above it, we retested it, and then we promptly continue to push higher on the broader market. So not only is the tech stocks participating in this rally, the broader market is, the small caps are participating in this rally. So you can see that there's underlying strength in this entire stock market where the market wants to continue to push higher. Now, some of the key events to pay attention to for this week is the CPI report, which is coming out tomorrow. We have the PPI report, and I believe we have some job numbers coming out on Thursday. Any of these events could lead to a pullback in the stock market and continue to, reset technicals and push the market even higher. But until technical picture changes, it's only right to remain long, even on pullbacks. So you can see that on Wednesday, there could be some sort of Supreme Court ruling. A lot of people are nervous about it. A lot of people are positioned short with it. But I believe that until we get any sort of ruling, I think it's still right to remain long. CNBC says that it's unclear when the tariff ruling will be released. The court will release its next rulings Wednesday. However, the final decision could fall somewhere in between. And Treasury Secretary Scott Bessent himself said Thursday he expects a mishmash ruling. So I believe last week, it was on Friday, a lot of people were scared. A lot of people were like hedged on Friday to brace for this bad ruling that they're going to strike down Trump tariffs. But, nothing happened, and they simply just delayed their decision. And pretty much the same thing could happen on Wednesday until I see a lot of dark pull positionings for the bearish side, or even cheddar flow readings for lots of put positions. I'm not seeing any of that. So it's just that a lot of people are still very nervous about what happened in 2025, which is causing them to really short the stock market and using any event as an excuse to hedge, really. And it's understandable because of what happened in 2025. So, and I believe that, there are really two factors influencing the market right now, or three really. The first is the Trump put, which pretty much what we saw with Scott Bessent and the Trump administration team in trying to protect any downsides that happened in the market. And the second is market psychology. So like I said, a lot of people are just understandably nervous about what could happen, if the market does decide to break down. And the third is that there's going to be a very dovish Fed in 2026 where, Powell is replaced by Trump's new Fed chair. So he's going to, whatever decision he makes, he's going to side with Trump, and that should definitely influence the markets in the near term. So hope this helps you guys with your S&P 500 analysis and your analysis of the overall markets. If you have any questions or comments, please leave them down in the comment section below, and I'll see you guys in the next update. Peace.